Good morning, everyone. My name is Pushpalatha. I'm going to explain the indirect tax. Indirect tax introduction. Indirect taxes and tax make significant aspect of fiscal policy for many government worldwide. Unlike direct tax, which are levied directly on the individuals or entities, in indirect tax are imposed on goods and service at the point of consumption or production. Here an overview of the introduction of indirect tax. Definition: the indirect tax are the tax levied on goods and services rather than income or profits. They are typically included in the price of the goods and services as passed on to the consumer by the producer or sellers. Four reasons for indirect tax: revenue generation, distribution of tax burden, encouraging the specific behaviors, projections of domestic industries, simplicity of easy to administration. First one is revenue and generation. Indirect tax are the important source of revenue for governments. They are providing stable and predictable source of income, especially in economics where directly tax may be limited. Next one is distribution of tax burden. The tax burden is distributed to consumer level. Indirect tax can be structured on distribution the tax burden more evenly across the production, as everyone who purchases of goods and services these tax through regardless to their income level. Next one is encouraging the specific behaviors. Indirect tax can be used to influence consumer behavior by making certain goods more expensive or cheaper. For example, higher tax on discourage smoking while lower cast on essential goods for making them too affordable. Next one is production and domestic industries. Customers duties and other forms of indirect taxation can be used to protect domestic industries from foreign competitions by making the imported goods more expensive. Next one is simplicity of easier and of administration. Indirect tax are often similar to administrated than direct taxes. They are collected at the point of sales production. They reduce administrative cost and then expensive. Next one is challenge and considerations. While indirect tax offer several benefits, they also come with the challenges, including three categories: impact on low income groups, economic efficiency, compliance and enforcement. First one is impact on low income group. Indirect tax can be disappearability affect low income groups as such they may spend a large proportions of their income on the tax, goods and services. Next one is economic efficiency. Indirect tax can distort market behavior and lead on inefficiently, then particularly if they are applied inconsistency or exclusive. Next one is enforcement. Encouraging compliance with the indirect tax laws and preventing tax evasions can be challenging for governments, particularly in economics with large informal sectors. In conclusion, the introduction of direct tax is critical aspect of fiscal policy for governments seeking to raise revenue, influence consumer behavior and protect domestic industries. However, the policymakers then may carefully consider the impact of these tax on different segments of society and the overall economic for ensure that achieve their intended objective while minimizing the unlimited frequency. Next one is indirect tax play with in government revenue generation of the often used to fund publics to tax rates. The efficient collection of administration and direct tax essential for maintaining the physical stability and encouraging the equitable distribution of the tax burden with the society. These are the points are discussed in the introduction point. Next, we will continue at the next portions.